So good morning, everyone. Let's have a market review for the weekend of 24th December. As usual, we'll start with the world market, Indian markets, Indian sectors and stocks. So let's start with the world markets. So versus the last week after US broke out, where US and European markets have performed exceptionally well. This week was quite flattish. If you see, barring Kospi, no other market has even crossed 1% on a weekly basis. In fact, they're quite flat, and the VIX also has risen this week. So there is kind of a caution everywhere. Dow Jones, it is kind of after breaking out is in a sideways move. Momentum wise, nothing wrong in it, just that it is consolidating, so can pick up any time after that. Nasdaq tried to cross into all-time high, but has just managed to close over there. Based on the momentum, it should be able to sustain above that, and momentum should continue. In case it starts falling from here, then there can be a good correction in Nasdaq also. So next week we have to watch out. US is closed because of Christmas holidays. Not closed. Monday is closed, but after that the volumes will not be there. S&P is not yet crossed the all-time high, just shy away from it, trying to cross, and so let's see how that goes ahead. Nikkei is again trying to break out, not able to. This is the fourth or fifth attempt of it. Let's see, but not even falling. Bank of Japan is very clear. They're not increasing the interest rates for now. So that concern is gone now. Germany has moved up well and holding up there a little sideways. Should again, cool off a little and pick up steam. US oil is sideways after last week. There's no much movement in that, but it continues to be a sell on rise until there is a complete change in trend in that. USD INR, there's a possibility. What I feel is USD INR may test 81 and then move back up. So there's a scope of USD INR playing between the range of 81 to 83, likely to test 81 once. Gold is trending, no concerns with gold, looks strong on all time frames. Silver not yet been able to break out. Silver is in its own tangent. I think it'll take some time. And if you see Indian markets, mostly negative. Bank and auto have performed very bad, including metals. And in fact, metals was in a momentum last week. Even IT. So versus that, FMCG has done better, pharma has done better, and also these are little defensive sectors. So that is one of the reasons why they are up. But barring that, all other sectors are overall negative for the week. Now, if you look at Nifty, Nifty is from the RSI standpoint, it is still all above 16 all time frame. So no lack of momentum in any of them, but it has retraced this week. Overall, as an index, does not show any concern. But it is a very tough question about the rally continuing and where it stops, because currently Indian market is the most expensive market in terms of valuations globally right now. While it sounds really good, it is also a little concerning because this is a phase of euphoria, because we are clearly our markets are being run because of the liquidity that is coming in with insane valuations and insane targets upside. Whenever this kind of a scenario happens, there is a sudden pull in Nifty of 5, 7, 10%, but you don't know when the market will fall. What really concerns me at this point in time, and why last 2-3 weeks we've been overcautious, is like the Wednesday fall, when Nifty was 20,800, 20,900, and then it rallied up, stocks went up with that. That one fall on Wednesday got all stock prices down to the same level of 20,800. Anyone who was part of the market in those 500 points rally basically gained nothing. All retail positions, wherever they were leveraged, was forcefully squared off because of mark-to-market concerns. Brokers didn't allow many of them to take new positions. So let's say from here, if Nifty has to continue with the momentum like I explained that happened in 2021, and Nifty goes up, let's say 2,000 points from here, a single day dip in index will bring all stock prices down to where it is today. So from here on, when you are trading, please be very mindful of quantity. You don't have to go overboard. Don't get greedy. One lot, even being an equity, is safe. It is not always about making big money or money. Be consistent, be safe. That is more important. Now this was a cup pattern breakout of Nifty that we had always spoken about. 21,600 was the target. It has just tested that and it has fallen. And it hasn't been able to cross this, though last 2 days have been good. In the past, I have shown you in 21 where RSI was consolidating and it continued a new journey and made a newer high, which was about 5% more than the high previously made. If something replicates this time, we can also see that Nifty, if it crosses 21,600, can go to 22,500, 23,000 also. I'm not ruling that out because of the liquidity, but it is advisable to be very stock specific in this rally. Equal 8 index, likewise, it retested the breakout over here. Next day went below that and it's back up. A very similar move, but shows the broader market is like, trying to pull back up and selectively. Nifty EPS stands at 935, P at 22.71, rising day by day as Nifty is moving up. Bank Nifty is consolidating near the highs, but clearly heavyweights in banking is not supporting it, like Axis, HDFC and all, SBIs and all are not supporting the rally from here. It has been very stock specific rally that is going on. So a little cautious over there also before what we pick up. Ideally, in such cases, what happens is whenever RSI corrects, tests 60 and moves back up is a best case scenario because the momentum is strong. It has just taken a pause and it is again building up steam. So what is important here is we watch whether Bank Nifty is reversing from 60 or breaking that. If on daily it goes below 60, then on a short term it is going to go on a sideways market. And if it bounces from there, there's going to be a quick momentum back up. Again, but very stock specific over there. Again, what I'd shown in the earlier weeks, this is where the resistance is and it is not going to cross that very easily. The day it crosses that, we know for sure there's going to be a good momentum on the upside. Okay, these two lines, I don't know how they have come up on the screen. I don't want to delete them, so ignore them, please. Mid-cap index has cooled off. Now look at it, how beautifully it takes support of 60. Even on the weekly, on the earlier, it had taken support of 60 and not broken that. Even on monthly, it was hovering around above 60 and moving up. So whenever a stock corrects up to 60 and moves back up, it just shows that momentum in them is strong. But here, one thing that I am a little concerned about is, please observe the daily and weekly candles. What has formed here, the big red candle, it was formed in July also in the past. After that, it rose 3 days, then continued to be sideways and then had a big dip. Trying to move up may be a similar pattern. On the weekly, see the candle that it had made on the weekly. See the candle that is made here, very similar, both at the peaks, right? Look at the RSIs of both. And from there for almost 4-5 weeks, it was sideways and then there was a dip, right? This kind of a dip, even if the index fall 4-5%, stocks tend to fall 3-4 times more. So that is one of the cautions now I want to have. I've been saying that mid and small cap are overvalued and we need to have a caution. This is one of the first signs that I'm getting right now of a rally getting exhausted over here. And a dip is possible. So let's be cautious. Let's not get into mid cap and small cap stock until there is a good correction in them because the risk reward is not appropriate in most of the stocks over here right now. It is exactly the case in small cap index also. Small cap index currently has taken support of 40 RSI and 60 RSI and moving back up. It has also pulled off from the, the averages perspective. But the candles that are forming, that is something that I want you to take a closer look at and understand that, like it in mid cap stocks, this candle also look at the a little reversal and then a fall again. It pulled up a little and a deep correction after that. This is again highly possible in the next few days in small and mid cap stocks. As the focus has been moving to large cap stocks, we may see this hit in small and mid cap. So be prepared for any sudden big dip in stocks as well. Best is keep stop losses, do not avoid that. Auto sector, again, see, it retraced and tested 50 and moving back up. Currently at a resistance of 60 over here. If it crosses 60, it's going to pick up sudden momentum. You will get a good, a quick trade in Tata Motors, which is almost going into all-time high again if it breaks out. Maruti is retraced well and reversing. So we'll watch out for certain stocks that give us a good opportunity. FMCG was good this week, but it's more like a defensive safe bet in a market which is going sideways. So let's see how it plays out. We have ITC in equity and we continue holding that. We are not going to look at futures in that right now. IT is back in momentum. It retraced, consolidated a little and back up. So IT still looks promising. We have IT stocks and we'll continue to hold them. I don't see a concern in IT at all. Metals, again, look at the RSI, tested 60, look at the daily chart, tested AMA, that is adaptive average, and shot back up. So metals is back. It was a good opportunity to re-enter in certain stocks, if not all. And we have held on to JSL and Tata Steel, which are back in momentum. Also, the DXY has cooled off. So that also is an additional add-on in metals. But having said that, while everything is good, I see extreme retail participation in metal stocks. So don't go overboard. Be a little easy in terms of quantity that you have. Keep it in your control. That is very important. Pharma sector is very slow mover. I don't see much happening. Index is very confusing. Selected stocks are doing well. Aurobindo has given all-time breakout, so trend should continue as long as it is above 1060. If it goes below that, is a concern. Other stocks, I'm not yet looking at it. Glenmark is trying to show good signs, but I would rather wait. Even Lupin is trying to give a breakout, so even Lupin can be considered if it breaks out and sustains. Please note it is very important of its sustaining, and sustaining is not a few minutes, but at least for a day or two. PSU banks, now PSUs be very watchful. Okay, now though it has tested, everything is going good, but somehow PSU stocks are extremely overvalued. In certain stocks, even 2026-27 earnings have been discounted because that is a kind of euphoric rally PSU stocks have seen. It's like a complete FOMO kind of a scenario in them. Please note BHEL, we were checking today morning, we were checking the valuations of a lot of PSU stocks, and BHEL has a PE of 850, which is insane. From an investor standpoint, think of it. No one would buy a stock which has a PE of 850. It is ridiculous. And it's not that BHEL has some great earnings also. So very, very important that we be very cautious and mindful in PSU stocks. PSU banks, again near support, consider only on reversals. Index wise, again taking support at 60. If it goes below 60, it will fall further. It's very selective. State Bank of India, Bank of Baroda, Canara all broke out but have not held on. They have come down. There's a possibility that there may be sell-off in a couple of them. And in fact, instead of buying, we may get a short call on them. I think Sonal will explain that better after I'm done. Private banks near support and caution is advised. Again, if you see RSI wise, this is also at 60 on a daily, and while weekly and monthly are trending. HDFC Bank tried to break out. It did not hold. It has come down. So from individual stock point of view, also a little caution is needed because they are not able to hold above on the higher levels. Reality is an extreme strong trend. If you see DLF just retails a little and shot back up, these whenever there's a reversal from 60 and averages as an excellent turnaround. And just that DLF just shot up, it opened up a couple of percentage points up and continued with the rally. We'll stick to Shriram Properties over there, what we have, and happy with that for now. So on momentum front, Nifty and most sectoral indices are still strong and no major signs of weakness. Concern remains that no profit booking is seen from 18,800 to 21,600. Rally now turns into euphoria. Indian markets now the most expensive and valuations in the world. Liquidity pulling the markets up, or say not letting it fall. So put it like that, that the liquidity that is being pumped in by the institutions is not allowing the market to correct. But it'll just take a day's one button for them to press with big volumes and it'll come down crashing. But such trends are not sustainable and fall cannot be timed, like the peaks cannot be calculated. So just be careful. I'm just repeating this, just be careful. Now, the sectors, banking very selective, metal and IT is what we would be looking at continuing in the next coming weeks also. And that will be the thrust of the, the short-term swing trades that we'll be looking at. Now, there is one thing that, people keep calling us and comparing is today Nifty has gone up 1%. Our portfolio didn't go up so much or meant more than that. Nifty has fallen 0.5%, but my stock fell more than that. Do you really need to compare your portfolio with the benchmarks every single day? I say no, it's not. We are not in a race to show someone or anyone that we are better. Secondly, please avoid peer pressure and comparison with anyone or anything on social media, especially where people say, I made so much money today while the stock was down or the index was down. We are not in a comparison race. Be in your comfort zone, make money consistent. That is more important. And by the end of the year, your portfolio should have performed better than the index. I always tell people that if your 10-year return year on year is 15% or 17%, you are in the top 0.1% of the investors in India. And that should be your target. This year has been exceptionally good with giving a 70% return. But these are not the kind of years you get year on year. So don't fall the trap of comparing your portfolio on a daily or weekly basis. It doesn't make really sense, because the stock you have may not have performed that well that week, but that doesn't mean to say it's a bad stock. Day it starts moving, it'll outperform, leaving all the benchmarks behind. So that is very important. Whenever a scenario, even if it comes across that on a weekly or a fortnightly basis or a monthly basis where you're not being able to generate as much profit versus the benchmarks, that is when you need to understand whether which sectors are doing well and whether that sector is there in your portfolio or no. If it is not there, why you don't have it? Have a logical answer and convince yourself as to why it is not there. It is not necessary every sector or every stock has to be a part of your portfolio. Like for me, as strong as pharma may breakout, pharma will be, even in the highest momentum, a very small percentage of my portfolio, because it is a very sensitive sector. So I have to be convinced that I don't want to be a part of the broader rally in pharma, because that sector can come coming down crashing any given time because of the US FDA norms. So don't get into the habit of comparisons on a daily or a very short term basis. Look at the broader returns, how it is faring up in your portfolio. Now, a few stocks that I want to talk. Apollo, we discussed last week. It did try to break out. It didn't hold in for a few minutes on top, came down crashing, and now clearly it has broken the support and gone down. Please see one thing very clear, the candle over here and the candle here, and see how it consolidated and then came down. Something similar may happen in Apollo. Apollo can give you a brilliant short opportunity, but let's assume that it goes into a sideways like this for a couple of days. Then you will not make money selling futures over here. So if the best way to make money in Apollo tires is to sell a call above 440. Okay, because even if goes sideways and doesn't fall, the call will lose its premium. Don't buy a put, don't sell futures. Best is to sell a call above 440 in this kind of a case. Bharat Forge looks good to me because again taking support of 40 and reversing while the longer term is momentum, taken AMA support and shooting back up. I would be comfortable only if it crosses 1230 levels to buy and try to capture rest of the rally upside up to 1295 that we have targeted the first time. But there's no weakness in this. So this is one stock I would put it on my watch list. Cummins trying to break out. Nice third or fourth time it is attempting to. And even the volumes on Friday were good. So if Cummins goes about 2030, I'm not in a hurry. If it sustains about that, there's a possibility of it giving 300 points upside. You can do one lot in future by trailing stop losses or just take an equity to be safe. So keep Cummins in mind. The third stock is HDFC Bank. Now look at this, that HDFC Bank is unable to hold above the 1680 levels. In fact, it came down yesterday and the fall was with good volumes also. So now either HDFC falls from here or it consolidates, but anything good can happen in HDFC only now, I would say, if it sustains above 1700 and not even above 1680. And I am also of a view that from here, if they have to pull Nifty up and continue with the Nifty, momentum up to trap retail investors with a positive sentiment. They may now use Reliance and HDFC to hold the markets up and not allow it to fall, while other stocks and sectors will start falling. There can be a time correction, there can be a price correction, or whatever has to happen. So it'll become very difficult to make money in stocks from here on, while the index is going to go up because of these two heavyweights. So again, it is not a very easy time from here. There are a lot of ifs and buts. So be very, very cautious, keeping all these criterias in mind. So this is all I have to talk about stocks. I hand over to Sonal to discuss her stocks and views on what she's analyzed.
Good morning, everyone. So I'll try to explain Nifty, Bank Nifty, and other of our holdings according to my setup. So if you see the daily time frame of Nifty, we have seen a good reversal from the support zone. I kept saying that this window gap may, after the fall, on Wednesday, we were expecting this window gap to kind of support the, reversal. And kind of, that happened. And you can just see it making a good bullish candle. And the followed day also, it made a good candle. It is not highly bullish, but mildly bullish. But this is, kind of signifying a spinning top with shallow shadows. So that itself kind of throws a caution on the analyst and the traders and the professional traders that this is, I don't know if it is a trap or what, but this is the time we need to be highly, highly cautious. And that is the reason we suggested to sell Nifty in case of any basket selling, what we saw on Wednesday. Now, if you see on weekly also, this is the trend line. This is the channel, what Nifty followed from June 22. And this is the channel even we have been following. So now it has come to the channel resistance on weekly. So, and the supply zone is exactly according to the demand and supply theories, it is coming around 21,596. Now, there is another thing I want to show you according to Fibonacci extension. One second. So if I just draw a Fibonacci retracement, the extension retracement from here. Now, let's say March is the bottom that we kind of, we expected it to show the reversal. And I'm taking this wave count. So according to this wave count also, the trend has already extended to 78.6%. And again, the resistance is coming around 21,662 on weekly. So you can imagine how important and what a, daunting hurdle it is for Nifty to cross it. So, of course, knowing that what is happening on the, charts and the technical setup, it just throws one thing at us to be cautious. So, Nifty has never retraced in, the uptrend has never kind of gone to an extension of beyond 78.6. Next week, when we discuss about seasonality, you will understand that why we are here being very cautious. And even if some scripts that are showing, kind of good breakout with volume, we are little hesitant to hold it further because we don't want you guys to just unnecessary incur loss in case of basket selling. So your supply demand zone, according to Fibonacci extension retracement, this is a highly congestion area. So we need to be cautious here. Don't go overboard with your quantity. Even we at our end, not going beyond 2-3 lots. So equity, you may depending on your capital and risk appetite, may kind of increase the exposure there, but future, be extremely careful. Now in case of bank nifty, the movement was quite unusual on Friday. Now you see it has clearly made a very nice, right from the support zone, it reversed and it made a nice piercing candlestick pattern, because here the closing is above the 50% of the previous candle. But after giving and after just making such a strong candlestick pattern also, and it kind of crossed above a very good resistance, a very strong resistance level of 47,561 on Thursday, but next day you see the closing, it is below that resistance, again showing that sellers are very active. According to the supply zone 48,205, please mark these levels. This is a strong resistance where you can see many bears or the sellers will keep pushing Nifty Bank down. And now, if you see the channel, again it is near resistance Nifty Bank, and why we are so cautious, and again sending you the message is just stay cautious. This is not the market, how we were in the past 2-3 months where we were going all out with longs, but this is not the market for us to take a big exposure. And if I do again a extension, see this I am drawing in front of you so that you guys understand that how you need to kind of take account of the uptrends or the waves what you see in swings. Now here, if I just draw this, look at this, it has already reached the 61.8% of Fibonacci extension, and we know that how important Fibonacci levels are. Everything in this universe follows this Fibonacci series, and so is our stock market. So we should not ignore these levels and be highly cautious when the market has kind of extended the uptrend to 61.8 and 78 levels. So just stay cautious. Any breakout here will be kind of give us, or the breakout should not happen seeing what is happening on the chart. But then of course we will change our views if it kind of closes above this resistance line. Now I'll just quickly take you guys through a few of our holdings. So this is Tata Steel. On Wednesday, I kind of, sent a message also. Unless we go by rules, we go by books. If our stop loss is also hit and there is some strong support, below it, we don't get panic unless that strong support is taken off. So in case of Tata Steel, this is what exactly happened. It was near a lot of EMAs. Like this is a medium term EMA, and it kind of, closed above 21 EMA that the other day on Thursday tested and reversed. If Tata Steel again sees, so this is a fresh supply zone that has been created in case of Tata Steel after a breakout, which is not a good thing. But if it is again on Tuesday, if it kind of struggles to cross it, we will book our Tata Steel around 137.38. I would like to kind of observe this script for a bit on Tuesday. Any weakness or any breaking of the short-term EMA would be an exit. But if in case if it just goes up but struggles to cross this, we will book off in Tata Steel. Indian Hotel. Now, Indian Hotel, we went long here after a strong breakout with a good institutional buying. It did try to go up. Then there was a breakdown due to Wednesday sell-off. And now you can see it is making a huge, bullish candles with good volumes here. So in case if there is another good, bullish candle in Indian hotels on Tuesday, that would kind of, give us a pattern of three soldiers. So we will keep holding it. But if we see again its previous highs, if we see that, because we are holding two lots, if we see that, some sort of sellout from here, we will be extra cautious and book in Indian hotels. See, I know here we are kind of, 10, 15 points, we are booking profit, or we are exiting, and all that things we are doing. Just understand why we are doing it, unlike before where we have always held scripts for a long time, is just because how the indices are kind of placed on higher time frame. It is not giving us the confidence to kind of hold it for, higher target. So we are here being extra cautious, because we have made a good money this year, and I don't want to unnecessarily lose our profit just because of the euphoria and, the other positive sentiments that we are hearing on social media and a lot of retailers also. So let's be cautious. Let's just retain the profit that we have made and be very selective. Siemens, same story. Good breakout with institutional buying, but could not held on to the breakout. And but then again here it gave a good reversal, and unfortunately it opened high because of a demerger news, and the demerger news was old, but the confirmation came on Thursday. So based on the account of that news, we saw a good build up during the day, but could not hold on to its gains. So it is again very safely placed around its EMAs. So unless this is broken, which is a short-term 21 days EMA, we will keep holding Siemens. And next week, when I do the seasonality analysis, reality and your capital goods and all, they tend to do well in the month of January. So we will see then that, why it is right now advisable to hold Siemens until the 21 days EMA is not broken. Coforge. I think Coforge, Persistent have been our favorite companies in the past few months also. We have traded many times. And again, in this case, a strong reversal from the demand zone and still kind of above the breakout point. Last time we booked profit somewhere here around 6,463. This time we will see how it is kind of, moving about this area. If it is able to cross 463, it's advisable to kind of keep holding it, but the market should also support. And the target of this pattern breakout is 7,156. Next is Coal India. Coal India, a very good build-up is happening. But this dark cloud candlestick pattern kind of, you saw it on even Friday, that their highs were acting as resistance. Every time Coal India was trying to cross 368, 369, some sellers were coming and dumping it. But now Friday's trading was backed with good volume. It has closed above the this horizontal consolidation, rectangular consolidation, what we have seen. So in case if it is able to kind of break this supply zone, we'll keep holding for a target of 380. I have Coal India in equity also because the target is quite big. But if in case of any kind of supply from the zone I mentioned, 370 to 371, we'll book off our one lot in future and comfortably hold it in equity. ICICI Bank, this is one of my, in private sector, this always been one of my favorite banks because of its fundamentals. We have traded many times in the past. After we, booked off in December, in the first of this book profit in the first week of December, it wasn't in my buying level. This much we missed in ICICI Bank. But when it came to our demand zone, which was a very, very strong demand zone backed by the piercing line candlestick pattern, what we saw in Bank Nifty, I thought the risk reward in this to go long is quite good, and it is safe for us. Like we are just playing for 10 to 15 points downside for an upside of 1040 to 1050. And so this gave a good reversal, and that is the reason we went long in ICICI Bank. So these are our future holdings. Apart from this, we booked that day Aurobindo. Zydus is again a good breakout, but I want to hold it in equity for time being. Once it crosses 700 level, the upside is quite big in case of Zydus. And fundamentally also this has a decent and acceptable P. Their order book is also very good, so it is safe to hold it in equity. Another one is Trill. Trill, very wholesome order book, but I am gonna be little cautious in this in case of Trill, because just like BHEL, it is trading at not at that high P of 800, but it is trading at a P of 200. So I want to be little cautious. We have I think 3,000 shares of Trill. We are holding it from 188 level, and for me another 10-15 points I will just book off profit and Trill. Any other script you want? It is like the one that I haven't explained. Manappuram, you know that how bullish I was. I shared a in detail fundamental analysis of Manappuram Finance also. So now from when we shared, the market price was 140. We have played swing in future many times in Manappuram, and now we are finally holding it in equity because the market wide open position is not very big in case of Manappuram Finance, and every second, third day it goes in a band. So that was one of the reasons to kind of hold and increase our quantity in equity. Now, if Manappuram 177 to 178 is a very strong resistance in case of Manappuram Finance, after this whole, we've been holding it from this level. And I think in between also we played swings twice or thrice in Manappuram Finance. If it just crosses 171 to 178, the next target will be 195. Until then, just, keep holding it confidently in equity. And probably after 177, 178, I may increase the quantity in our portfolio. And whenever we do it, we'll share it with you. Now, apart from all these holdings, for next week, I want you guys to keep this. We may not give, or we'll just share the, levels in the group, because Mayur and I have always, abode by the rule of kind of not holding more than 8 to 9, open position in future. When the market was strongly trending, we did hold like more than 12, 13 scripts, but this is not a time for us to kind of increase our, over diversify our portfolio. So persistent is again looking very good. It has given a channel breakout. If you remember, last time when we went long in this accumulation phase. We already knew that the, accumulation is happening. Why the trend line is not coming now? So the accumulation, when this accumulation was happening, we kind of anticipated the breakout will happen, anytime. But we exited when it broke the low of last 4 days. So we thought, it is better to kind of exit this and only enter when it gives a channel breakout. And yes, on Friday, it did give a channel breakout. And it is making, we have taken this candlestick pattern in one of our session also. This is making a rising 3 method candlestick pattern, which is a highly bullish candlestick pattern. So you can hold this script with either Friday's low or with a stop loss of 7,159. So persistent, as per the chart, it is very well placed. Maruti, when the sector has nicely retested the average and now reversing. Now, Maruti would be on our radar for January long, but we will only go long if it just kind of crosses the resistance of 10,374. This is not only a good resistance in terms of supply and demand zones. Even according to the EMAs, this level from 10,381 to 10,384 will act as a strong resistance. So let it cross it, let it kind of sustain above this level, then we can easily go long in this, even increase our lots in this for a target of 10,793. And if it kind of able to break out of that and not make a triple top, then we can keep holding for a higher target of 11,000. Now, Canara Bank, another, one of our Diwali recommendation, sorry. And we have always, we kind of, this is one stock where you all know that we kind of caught the bottom. So we went long at this level, got the entire uptrend until this orange line. We probably missed 10 to 15 points upside, but we could just kind of, tap in all this entire range of Canara Bank. We went long in Canara Bank when the market was deeply in red, and we saw this, reversal candle at the bottom and then started buying in equity. Now, Canara Bank, it is reversing from the channel resistance. If it breaks 422, we can short Canara Bank now. And if it breaks 413 further, then the next target, I don't see any strong support between 413 to 389. The next strong support comes at 389. So we can probably, see it going towards 389. That would be a channel bottom, and again go long from here. So this zone may kind of now Canara Bank will try to test it. So if yesterday, like Friday's low is broken, you can go short in Canara Bank with one lot. Another short on the short selling side is Federal Bank. Federal, let the lines come. So Federal Bank, this was the resistance, and it is clearly not able to cross 159. We saw selling coming from here, and this is the fresh supply zone that has been created in a Federal Bank with good selling volume. So we are anticipating it not to cross this 159 level in near future, because Bank Nifty is also near channel resistance. If Canara Bank breaks this 152 level, you can see it slipping towards the low of 149. And then going for the lot size is 5,000. So I think 5,000, right? So the lot size is 5,000, and even if you get 8-9 points, then it's just worth taking that much risk. And 147 to 146 is the next support, and if it breaks 146, the next strong support only comes at 137. So keep this also on your radar for short selling. Another one on a short selling side is Grasim. Grasim is reversing from its supply zone, from its, the channel resistance. I think the lines will come, and it has made a bearish, could not sustain the reversal, and it has made a bearish engulfing candle. Now, if it breaks this low on, in our next trading session, that is 2034, then it will further go down to 1987. And if 1987 is broken, Then the next support is 1920. So Grasim also looks very negative on the chart, and the fact that it could not cross the channel resistance, and after it kind of made a trend reversal from there, it is backed by good selling volume. So you may see further sell off in Grasim. So these were the stock recommendation from my side for next week. During the market, if market asks if any of these scripts, if any important support is broken, I'll share the levels with you. If we are taking the trade, we will write it at the bottom that we are taking this trade, but I'll definitely